Welcome back, and we have with us Umang Nata, who's the CEO at Mastek, joining us this morning. Great having you here, Umang. First off, with regard to the IMFA partnership, just let's start with that. Is there a commercial value attached to this, or is this more of an enabler for Mastek at this point in time? Is there revenue accretion likely right off the bat? Does it enhance your order book in any format?
Thank you, first of all, for having me on the call.
Great having you.
As we've been saying, healthcare and life sciences, specifically an AI transformation, positioning within healthcare and life sciences is a key part of our, agenda that we want to build. And the IMFA partnership is a very important step in that direction. The IMFA partnership gives us a very interesting data and AI platform partnership to work with, which is well established within healthcare and life sciences in the US, and is now starting to grow its foothold globally between UK, Europe, and Middle East. And our partnership with them, we become the transformation partner for deployment of that data AI solution, which is, I think, a really strong lever. It will allow us to really, move forward into the direction of becoming a transformative AI partner for healthcare and life sciences. The partnership is very strategic. We are amongst their top partners globally. And we're already starting to see good, healthy pipeline development on both sides, jointly working between IMFA and Mastek, working together. And there is active pipeline that is building up. We are quite confident that we will start seeing a good rhythm of order book and revenue that will be, visible, especially in North America, but globally on the back of this partnership, which will start happening very fast.
Umang, hi, morning. Can you also give the sense of the kind of potential, top line impact that it can bring? I understand that it's, you're going to do that along with the IMFA. But what could be the gains that you can get from a revenue potential point of view? Does it add new logos to you, or you can go since you're going to market with them?
Yeah, so we have multiple choices when we looked at the partnership. There are existing customers of ours, which are common customers, and we can expand the business within those customers, where we are largely doing back office or CX transformation. It will give us a roadmap to get into their data AI transformations. And we are also looking at net new customer acquisitions, which we can jointly look at. And we're also looking at expanding IMFA's footprint, where they are delivering one or two use cases. We would want to convert it into a transformative use case for them. From a revenue and business standpoint, our view is over the next 3 to 5 years, they should deliver us, more than 100 million worth of revenue over the next 3 to 5 years. And it will help us in terms of expanding. So it's a very important service line that we are trying to develop. It has some really strong momentum already, like I said, with existing customers that we've identified and we have started working on, as well as a lot of joint marketing motions to acquire new customers.
You've consistently maintained, Umang, that the strategy around AI for you is no platform IP and no product bets. It's about services execution. Talk to us about how far are we from that point, because currently we're not seeing that as a material impact on the top line. When does that start to accrue, both from an orders perspective and from a top line perspective?
Yeah, it's a great question. See, the message that we've been giving is, and this IMFA partnership is exactly in that same direction. There are companies which are specialized in building platforms and will continue to have their focus on building platforms. IMFA is one such example. And we are parallelly working with other companies in other verticals also to look at specialized platform partnerships for those verticals. Their investment in R&D on the platform is much higher, and therefore they will have much stronger depth on the platform. These companies, for them to deliver the true business outcome that the customer is looking forward for them, will need partners like us to do a transformative business. While they have built already, connectors with data and AI, but for the agents to deliver the business outcome, it will need transformative partners like Mastek to really, help the customer in terms of their data readiness, in terms of their integrations, in terms of change management, in terms of business consulting, and so on and so forth. So that's exactly the step in that direction, where we will partner with platforms which have a very strong focus on the platform and trying to use those platforms to deliver services, which is where our strength lies. As we have been saying, our order book on AI transformation or AI related order book is starting to pick up. We have been presenting those numbers over the last 3 or 4 quarters consistently. And those number of AI related services transactions are continuing to grow. While most of these deals are not very large deals, they are $1 million and sub kind of transactions, but the volume of those transactions is definitely very high, which is very encouraging because it allows us to move towards good base, because many of these are discovery, which will lead to alpha and beta kind of work. The other important area that we are now aggressively going to market is service as a software, which is where we are going to look at potential surround replacement of SaaS with bespoke solutions. We've done that internally at Mastek already. We've replaced our Dynamics CRM with a service as a software solution, aimed at delivering at least 10% improvement in our win probabilities. We're doing similar things for our recruitment application, which was SuccessFactors earlier. And we're very soon going to do that with SAP Ariba and a few other software that we use. The same proposition is what we are now taking to our customers, and there's a lot of excitement in terms of ability to look at AI transformation from a business outcome, but also look at G&A cost reductions or subscription cost reductions at the same time.
How quickly are you able to convert all those pilots which you are doing into transformation deals? And is token cost something which now companies are looking at very closely, because that increases their, while AI brings some bit of efficiency into it, but token cost brings in the operational cost for them as well.
Yeah, I mean, depending upon the kind of discovery or initial roadmap work that we're doing with the clients, anywhere between 3 months to a year kind of work is being done. Like I said, depending on the kind of roadmap that we're building, a lot of these are very strategic initiatives. And it's also a very agile kind of approach where you don't necessarily need to wait for the entire year of the discovery. You keep discovering, you find areas, and then you start transforming parts of their businesses. There are customers where we've already done some important transformations in their initial surround areas, and we're now moving to their core central applications that they had. So that's the change that we are already in that journey of building. It's a built up, but customers have really started realizing that it's not just the technology, it is going to be a lot of services along with the technology, which will allow them to really gain the kind of overall value that they're looking at. So I think it's shaping up well in terms of that kind of direction. But these initial deals are anywhere between 3 months to a year, depending upon the kind of work that we are executing for them.
Last off, just with regard to the geographies that this Innovaccer partnership covers, it's North America, Europe, Middle East, UK. Some of these markets have demonstrated softness. Does this in any way change that in terms of the way in which you're seeing traction?
So it's an important partnership. Healthcare is a key vertical, and most of the healthcare customers, whether it is providers, payers, or life sciences, are looking at AI transformation to support their businesses. In general, for example, the healthcare costs have been consistently going up, whereas the time that they are able to devote to patient seeing versus administrative tasks is disproportionately moving in the wrong direction, which is towards administrative tasks. So there is a lot of transformation asks that we are seeing from many of our customers, including NHS, for whom we are doing a lot of data-related activities. Getting your data contextually ready is going to be the first step in many of these AI transformations. And then it is also going to be relooking at your processes and then driving business outcomes from those. So the partnership with Innovaccer is going to look at all the 3 markets, which is UK, Europe, North America, as well as Middle East. and we are seeing interesting traction across all the three areas. It's much more active in North America because that's where Innovaccer's stronghold was traditionally, but it is also starting to show up in Middle East. We are working with them on a strategic path. How do we take it to UK, Europe, because that's our biggest market, and we're doing a little more planning, but we will launch a very aggressive UK, Europe campaign also, because eventually data and AI is where the whole path is, and getting data contextually ready to deliver AI transformation is the journey that we're really trying to build on.
Okay, Umang, thank you so much for coming in and giving us that perspective. We'll let you go.
Thank you.
Well, that was, of course, the management of Mastek. What we'll do is slip into a very short break, come back, plenty to speak about. Stay with us here on ET Now. On the other side, we'll have a very interesting conversation slotted for you. Welcome back, and we're joined by the management of IMFA. In fact, IMFA is looking to extend its capacity over the next year or so. Ashesha spoke with Subrakant Panda. He's Managing Director, Indian Metals and Ferroalloys, to understand how they plan to focus on the domestic market and grow their business. Listen in to a slice of that conversation Ashesha had.
Indeed, it's a very important milestone with the first furnace at our Greenfield project, or KNR1 as we refer to it. We tapped hot metal for the first time yesterday, and we are now in the process of gradually building up load. And therefore, we expect the furnace to add meaningfully to our ferrochrome production targets starting from September. Now, as your viewers would recall, we are in the process of doubling our capacity. So in addition to our existing facilities at Tirubali and Chaudhar, where we produced about 265,000 tons of ferrochrome in FY26. Earlier this year, in March, we took over a unit in Kalinganagar, which we call KNR2, which was with Tata Steel. So that has commenced production from April of 2026. And has contributed about 16 to 17,000 tons in Q1 of FY27. Now, the final piece of the puzzle, as it were, is the Greenfield project, which is located, in the vicinity of the acquired unit. So, administratively, from a economies of scale perspective, it works out very well for us. So this is a 100,000 tons per annum project where we have two furnaces. And as you just mentioned, the first furnace has started from yesterday. As far as the second furnace is concerned, we are expecting to start the commissioning activity sometimes towards the end of September, and again have it stabilize from, let's say, October onwards. So what it basically means is that as far as FY27 is concerned, we are targeting 380,000 tons of ferrochrome production as compared to 265,000, as I mentioned, in FY26. But we will actually end the calendar year 2026 with a monthly run rate coming close to the equivalent of 500,000 tons. So our target for FY28 production with our existing facilities at Tirubali, Chaudhar, and KNR1 and KNR2 all operational is about 475 to 500,000 tons. So it's a significant increase in capacity, clearly making us the largest producer of ferrochrome in India and amongst the foremost globally. And it is also coming at a time when ferrochrome prices have been fairly strong on account of supply constraints, on account of cost factors. We are, of course, benefited by the fact that we are a fully integrated producer, which means we have our own chrome ore mines as well as captive power generation.
Okay, so that's as far as the first and second furnace is concerned, and you've also answered a couple of other questions that I had in mind. One, of course, was with respect to the target that you have for FY27, where you said that you're targeting 380,000 tons of ferrochrome. Am I getting it right? Versus 265,000 in the previous year, correct?
That's right. So FY26 was 265. The target for FY27 is 380,000 tons. We toned it down a little bit because of certain factors. When we, the unit which we acquired was something which was not operational for a while. So we are, sorting out a few issues there and debottlenecking it. And for FY28, the target remains 475 to 500,000 tons of ferrochrome. And let me touch upon one other point. All of this is basis the start of the value addition cycle, which is our captive chrome ore mines. And there also we are seeing a similar increase in ore raising. So a couple of years ago, we were at roughly 600,000 tons per annum, 0.6 million tons. And the ore raising target for FY27 is 1 million tons, which is a significant milestone. And, just to be very clear, our entire expanded capacity of 500,000 tons will be fed from captive chrome ore. We are not looking to buy any chrome ore from outside. So obviously that is what makes us both competitive and resilient at a time when there are challenges around the world on account of geopolitics. But fortunately, our fully integrated business model, the fact that we have a balance sheet which is net debt free, and that our export focus is by and large the Far East markets, which are, so broadly speaking, we have no exposure to West Asia, either in terms of imports or exports.
Okay, no exposure to West Asia. And I was just reading a couple of other statements. You've said that 95% of your exports actually go to Far East. So that is not a concern for you. But while we are talking about your capacity expansion plans and that you have massive expansion plans over the next few years, will that lead to margin expansion too? Now with increasing capacity and increasing scale, what kind of margins are you targeting over the next few years?
Okay, may I just quickly answer the comment or respond to the comment that you made about exports. So for FY26 or up till FY26, we had been roughly about 90 to 95% exports. But going ahead, we are looking to start selling more in the domestic market, where there is both an opportunity, and I also believe that as the largest producer of ferrochrome in the country, there is also a sort of expectation on us to make sure that the domestic market is properly catered to. So over the course of the next 12 to 18 months, we are expecting to, the 95-5 mix in favor of exports to change to about 60-40 still in favor of exports, but, significant 200 plus thousand tons of ferrochrome targeted at the domestic market.
Will margin profile change as a result of this? Are exports more lucrative as compared to domestic sales?
So margin profile will not change as a result of the sales mix because ferrochrome has minimal duty protection, something like 3 to 5%. So actually, there is not much of a pricing differential between the domestic market and the export market. The pricing difference, if any, is a result of the timing of finalization of contracts. Certainly, domestic sales, you don't have to accumulate tonnage, so the working capital cycle will get a little better and all of that. But having said that, you're on the right track in asking me the question about margin expansion. We do expect that. Now, margin expansion obviously comes from either buoyant prices or a reduction in the cost profile. Now, at the moment, as I said, ferrochrome prices have been fairly strong. We are looking at realizations around the 118 to 119,000 tons mark. 118 to 119,000 rupees a ton mark. So prices are definitely buoyant.
Hello and welcome. You've tuned into Midcap Masala right here on ET Now. I'm Meryl and with me is Ashesha. Together we're going to be bringing you all of the top newsmakers and the stock-specific buzzers from the broader ends of the markets. And one such stock with in focus and starting with the headlines now is JK Energy, that's gaining after receiving a letter of empanelment from a state government-owned power distribution utility. Now, under this empanelment, the company has been allocated 1 lakh rooftop solar projects aggregating to 100 megawatts with the total project value pegged at around 455 crores. And that stock is doing pretty well as well, up more than 4% in today's trade.
And shifting focus to Titagarh Rail Systems, the stock is up nearly 0.7% after signing a non-binding memorandum of understanding with Siemens Limited. And this is to jointly evaluate and explore international metro rolling stock opportunities on a case-by-case basis. The partnership is also expected to strengthen Titagarh's focus on local manufacturing and India's rail manufacturing ecosystem.
Steel stocks are also in focus today as steel prices have seen a sudden surge, lifting sentiments across the sector. We've got NMDC Steel as one of the key movers. Jindal Steel is also performing pretty well, and all of these gaining as the stronger steel prices improve the outlook for these producers.
And IMFA Finance, meanwhile, is in focus after a likely block deal. Alpha Wave India LP is the most likely seller in a deal that is possibly sized at about 320 crores. Alpha Wave, remember, holds nearly 8% stake in the company as on the 30th of June. The stock has given up quite a bit, but despite that, still up more than 1.5% in trade today.
Those are some of the top headlines and the top newsmakers in trade today. But one such stock in focus today is Nitco. That company has formed a JV with the House of Abhinandan Lodha for a 4,500 crore joint development, a project in Alibag. We have on board with us Mr. Vivek Talwar, the chairman and managing director of Nitco. A very good morning, Mr. Talwar. It's a pleasure to have you on board. Thank you so much for taking the time and speaking with us here on ET Now. I want to understand, to begin with, give us some outlook, some color on the JV that the company has entered into. Tell us more about this and what will your role be in this JV specifically?
So we have a large land bank in the MMR in excess of 300 acres, and we are working to cash out the holding that we have built over 20, 30, 40 years. And one such parcel is approximately 40 acres, which we have signed, as you mentioned, with the House of Abhinandan Lodha. And they would be doing a mixed-use development, while our role would be to clear the land. There are all lands, as you might be aware, always have some issues, and we are clearing them. So we signed the MOU, and in the next 3 months, we will give them a clear piece of land after due diligence so that they can commence work. Besides this, we have we have also signed in the past a transaction with Total Environment on 58 acres, which is now going up quite a bit, where the work is about to commence shortly.
Okay, so that's as far as the new agreement is concerned. But Mr. Talwar, morning, Ashesha here. I wanted to understand the agreement in terms of your role in this particular joint venture. Will you be supplying raw material? Are you venturing into real estate? How is the transaction structured? If you can explain for the benefit of our viewers.
We are not builders. We are not developers. We are landowners, and we will restrict our role to land. The land is being handed over to the House of Abhinandan Lodha, who will do all the development. But they will only take over the land from us once it's clear in all respects. So we don't have any further role after we hand over the land to them in a clean condition. Then we just have to wait for the revenues which they will generate when they do the development. And they're a great developer, one of the best in the country, and I'm sure they'll do, and all their projects are very, very high quality.
Okay, got that, Mr. Talwar. Can you also specify on the expected revenue potential? Now, over the period of 5 years, you've mentioned that it's going to be bringing about 1,500 crores to Nitco specifically, but can you give us a breakdown of how much of that are we expected to see come in when, and when is it going to start hitting your books very meaningfully?
The total project is about 2.2 million square feet, which will be villas and apartments, and they're also planning a hotel, I'm told. Our share in the apartments is 30% of the revenue of the top line and 35% in the villas. And they've estimated right now to sell the apartments at 26 or 27,000 rupees a square foot. But Alibag is only now just taking off. And we hope that, we expect that this will go up way in excess of 30 or even 40,000. But the estimate that we have worked out is based on what the figure of 26,000 or 27,000 rupees a square foot, which will be 4 or 4,500 square feet of the total project, and in which our share would be approximately 1,500 crores. We have received a 9 crore deposit now that we have signed. And at the time of signing the DEF doc and registering the agreements, we will receive a total of 45 crores. And as the project progresses, we will get our share as it goes along. But of course, a lot of the money would also come in later into the project.
Okay, and Mr. Talwar, what about the other land parcels that you have across Maharashtra and Goa? I was just going through your presentation. You have about 445 acres of land. Do you aim to monetize those land parcels as well? And what is the fair market value of this land parcels that you have?
So we are working very hard to clean up the lands and are talking to various top quality developers to develop all these lands. As I mentioned earlier, there are always some issues which we are resolving, and we are not looking to sell the land as it is. These lands are historical lands and bought at very low prices, and our aim is to try to get to maximize our revenue by doing a joint development with top developers, and we hope to be able to increase our revenue many times what we have done with as compared to what we have done with Abhinandan Lodha.
Got that. Mr. Talwar, can you also specify, in fact, can you give us more color on the fair market value of this land bank actually? And also, now that you've gone into this agreement with House of Abhinandan Lodha, are there any similar such agreements that you're eyeing in the near to mid-term or in the possible future? And if so, then what would this land be used for?
So, as I said, we have signed another agreement with Total Environment on a 58-acre parcel, which we are trying to increase to 70 or 80 or even 100 acres, where work will commence shortly. There, the revenue we have is approximately 500 crores. And we have land in Worli, we have land in Virar, we have land in Kanjurmarg, we have land in Thana. Again, we have done a deal with a developer on one of our lands where we are getting 110,000 square feet, which is valued at approximately 100 crores as our share. In Kanjurmarg, we had signed an agreement with Sandeep Runwal of Runwal Developers, where we hope to get about 400 and 450 crores, which had been signed earlier, is being formalized shortly.
Mr. Talwar,
we have about 1.5 acres in Worli, which we have been talking to a very large corporate to try and get a large revenue share there.
Right. I understand that you've already signed several agreements, but Mr. Talwar, we still want answer to that one question. What is the fair market value of all the land parcels combined?
But I don't know whether I should be saying this, or because we need to be disclosing this first to the stock exchange. But it's substantial. As I said, that our revenue is going to be multiples of what we have declared and done with the House of Abhinandan Lodha.
All right. Mr. Talwar, one last question before we let you go. We were just going through your financials before the interview. There has been a lot of volatility when it comes to the bottom line. However, top line growth has been very solid. What kind of revenue growth outlook should we forecast for the next few years?
So we are currently at a top line of 50 crores, and our aim has been to try and grow the top line at 3 to 5% month on month. And we are trying to achieve that, and we are hopeful we will achieve it. And once we reach, this year, we're planning to cross a revenue of 600 crores, and we should then be profitable in our core business. And the next year, and within 2 years, we will easily cross 1,000 crores. So once we do that, we should be reasonably profitable. And then there is no looking back now.
Right. Okay, Mr. Talwar, a revenue of 600 crores for this year and 1,000 crores for the next year. That's definitely a number that we're going to be tracking. Thank you so much for taking out the time to speak with us. It was a pleasure to have you on board.
It's 1,000 crores over the next 2 years, not
next 2 years. Next 2 years, absolutely. Thank you.
Thank you. Thank you.
With that, viewers, we'll slip into a very short break, but don't go anywhere. We'll bring you more corporate conversations and market updates on the other side.
Welcome back. You're still tuned into Midcap Masala on ET Now. And as promised, let's put the spotlight on Park MediWorld. The stock is in focus on the back of some developments. And we now have the whole-time director and the group CEO of the company, Dr. Sanjay Sharma, now joining us. Mr. Sharma, thank you so much. Ashesha here. First up, let's talk about the new PPP mandate that you have signed for the hospital, 550-bed hospital in Prayagraj. Can you shed some more light on what this means for the company? What will the timeline look like with respect to that, and what will your investment be?
Firstly, thank you so much for the invite, and good morning to you and to your viewers. Yes, I'm pleased to announce that this mandate on public-private partnership has been awarded to us from Prayagraj Municipal Corporation, Uttar Pradesh, to develop a 550-bedded multi-super speciality hospital in Prayagraj, Uttar Pradesh, which is also known as Allahabad. It is in a very centralized, densely populated area close to Arel Ghat, just 2-3 kilometers from Sangam Ghat. And we feel it's a major, you could say, impact which will have in our organization. This is one of the first private, public-private partnership which we have entered. The total cost would be about 200 crores, and we'll get about 2 years to build up and develop this 550-bedded hospital, in which we will be getting a special concession from the Prayagraj government, which will be to the tune of 76.52 crores, which will be an installment given to us against the construction.
Okay. Hi, Dr. Sharma. Medal here, also joining in. I want to understand what is the timeline that you're looking at in terms of when this facility will start contributing to your revenues meaningfully, and also on the 45-year concession. Can you help us understand the economics here at when this becomes EBITDA accretive for you?
We feel that it'll take about roughly 2 years to construct and develop this 550 bedded hospital, along with the building, the equipments, and the soft furnishing. And we should be able to commission it by January 2029. And if we take the financial year FY30, we feel that we should be able to clock about 75 crores in the first run of the first financial year FY30, and it should be EBITDA accretive. We feel that because there is also an annual concession fee which we have to give to the Prayagraj government, which will be to the tune of 18.10 crore annually, with an escalation cost of 3% annually. So we feel that the EBITDA should be around 6% in the first year. And second year, we feel that we will be able to take it to 125 crore, with EBITDA being somewhere in the close to the range of 12 to 14 crores, 14%. And by the third year, we feel that we should be clocking 250 crore with an EBITDA in the range of 18 to 20%.
So that's as far as the EBITDA and revenue potential, Dr. Sharma, of this particular project is. But any other expansion plans that are currently underway at this point in time?
Yeah, in this calendar year, in fact, the identified projects, we will all be putting up about 1,500 beds, out of which 1,040 have already been commissioned in Agra, Panchkula, and Rudrapur. And we will be coming out with 4 more, which will be in Palam Vihar. We are extending 100 bed to the existing facility, Platinum launch, which we are creating next to the 225 bedded hospital which we have. Besides this, in Zirakpur, Meher, we have initiated and we'll be commissioning this very soon, 150 bedded hospital. And in Delhi, Febris, also by this financial year, we will be commissioning 200 beds. So total 450 are pending, which also will be commissioned. So in this calendar year, in fact, we'll have a 46% rise by commissioning 1,490 beds to the current strength of 3,610. So it will turn out to be 4,740.
Okay.
And by the next year,
right.
FY28, we intend adding 1,000 beds more, which will take our strength to 5,740. And in January 2029, we will be commissioning the Prayagraj facility, also 550 beds, so which will take our strength to approximately 6,300 beds.
Okay, that's quite an aggressive bed expansion plan you've highlighted for us there, Dr. Sharma. Can you also walk us through the target debt levels? I mean, you've got quite a lot of expansions underway and even in the horizon. I want to understand what sort of, if you will be taking on any more debt to fund this, how this will be funded, and what's your target debt levels for the FY27 as well as going up to 29?
Okay, so the current expansion, which I mentioned to you, which will take our strength to 6,300 beds. Firstly, I would like to mention that this entire expansion, the capex will be around 35-36 lakhs, which is the lowest in the industry. One. The second is this, that this entire expansion, we are planning to do it through internal accrual. Thirdly, our term debt, long-term debt is practically negligible, around 25 crores. We have an unencumbered FD and current account together, say around 400 crores. So we are a cash-rich company currently. But if we have any further expansion coming in or any new projects or chain coming in, we are open to debt. We are open to also dilution, because currently the promoters hold 82.9% of the equity, which is a huge number. And we have a margin of dilution there also.
Okay, and one last question. Your balance sheet position continues to remain very strong. You barely have some term debt and the bank balance also is very strong. Dr. Sharma, what will the utilization strategy be? I do understand that you already have these capital expenditure plans. Will it only be used for this? Is there any other strategy that you're working on with respect to capital allocation?
In the capital allocation, if we come across, it will be only in healthcare. And that will be only if we have some large chain or large institutes or some other hospitals which match our vision and our thought process of providing high quality and relatively affordable healthcare. So that we'll go for it. In Uttar Pradesh, in fact, if I mention to you, this will be our third project. We have already started Agra, which is 360 bedded hospital. We have commissioned it in February this year. We will be commissioning Gorakhpur 400 bedded facility by the end of this year. And with Prayagraj coming in with 550 beds, by January 2029, we will have a significant number of beds, 1,260 beds in Uttar Pradesh. And we feel Uttar Pradesh, with a large population and a very big state, and with a lot of healthcare demand supply gap, we feel that this is a major initiative which we are taking in Uttar Pradesh.
Okay. That was a wonderful conversation, Dr. Sharma. Thank you so much for taking the time out to speak with us. Hoping to have you on board soon with us for another chat.
Thank you so much, Meryl, and thank you, Ashisha.
Thank you. With that, viewers, we're completely timed out on this edition of Midcap Masala, but stay tuned to ET Now. We're bringing you more market news and updates on the other side.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।